Good evening, and welcome to the ShadowTrader Video Weekly for Sunday, December 2nd, 2018. We've got a lot to talk about this week. It was a very, very interesting week. We had a big move on Wednesday after some very dovish comments from Fed Chairman Powell. We're kind of moving up above a little wedge pattern here. We broke some trends. We got basically a lot going on, and a lot of also imports sort of behind the scenes that I want to get into, some nuances. But regardless, let's start with the S&P as we always do. We are looking at currently a trend line break. That was kind of key. Basically, this was kicked off on the Wednesday move. And when I get into the market profile, I'll talk a little bit more about that. But this was the move that was kicked off from some dovish comments from Chairman Powell. And then we balanced a bit. And Friday, we actually balanced for most of the session, but then we started rallying about 1 p.m. or so, maybe a little bit later. And we pushed well above the trend line. And now we've actually closed a bar above the trend line. So one of the things I talk about all the time is, do you have what's called a confirmed close, or a move above a trend line that has some confirmation to it? And that confirmation is usually simply a daily bar closing. So for instance, when you have the move on Thursday, you don't have confirmation. You broke trend, but you closed underneath. But then Friday, you have confirmation. So we have now actually broken the downtrend in the S&P, which is really, really key, because this is the downtrend that's been in play since the all-time high was put in on October 3rd. We look at the other two indices that we watch closely, which are the NDX and the Russell. Same exact thing. Confirmed close above the trend line in the NDX. And in the rut also, right? Same thing. Thursday didn't make it, but then made it Friday. Now, I am paying attention to the fact that the rut is somewhat weaker. Notice the candle is a bit smaller. It seems like it's got a ways, it's got much further area to travel before it gets up to swing highs. But regardless, that trend is broken. It also should be noted that the rut moved down so much more and quicker that notice that the actual downtrend line here is quite far away in the rut. For the rut to actually, this is more of a shorter term trend here, whereas if you look at the SPX, it's the whole trend, right? This is the whole thing in the SPX. There's nothing like out here like in the rut. Okay, coming up this weekend, we have the Trump-Xi dinner. That could be definitely a market mover. So keep an eye on that. I think that what we're setting up for here is some sort of volatility that's going to increase. And remember, that can go in both directions, and that doesn't specifically mean that the VIX is going to go up. We could actually move hard to the upside, which will probably make the VIX go down. I think there were a lot of clues in the market profile over the last couple of days. There's a couple of important things that I want to point out here to you guys. Most importantly, one of the things that I got emailed on a lot after the big move, notice this is the comments by Powell, is whether or not it was real or not. And you can't ever really know if a spike move is real until the next day. Technically, in market profile, a spike is really only single prints that happen towards the end of the day. So for instance, this day on Wednesday actually had spike rules in play because there was a spike late day. Spike is when you have the last period. That O period is only half a period. So you have this N and O period where the bell rings and now you don't have enough time to know whether or not these higher prices are being accepted enough or not. So if you move above the spike, tells you that prices didn't auction high enough the day before in the spike to find any sellers, and it's very, very bullish. If you trade inside the spike, then you get confirmation that the spike was real and it's okay. So there's two areas on Wednesday that have this sort of spike. So we just talked about the actual spike, the one that's really called a spike, but then there's these single prints. And this has really been my focus all in the end of the last week, is whether or not we would go anywhere near this single print area and hold it or not. And you can see that we actually went nowhere near it. The market had a higher low on Friday. We didn't go anywhere near it. And we just had these kind of 2 days of balance, and then the market broke out on Friday towards the end of the day, correct? Up into here. So my focus this week in the Thursday-Friday trade, and I wrote about this in lurid detail in the pre-market commentary, the Peter's Premarket Perspective that I come out with at 9 a.m. sharp, a half hour before the market opens every single day. I talked about this on Thursday morning and also on Friday morning, saying, look, the odds are very, very strong that we just balance out this Wednesday move and we neither fall back down or go up big. But if I was leaning to one side, I would say we'll probably be long. And I said that specifically because the shock and awe of the people that are caught short in a move like that, it takes more than one day to play out. Not everybody covers on the first day. So, and then beyond that, some of the other things that I pointed out before the market opened on Thursday, for instance, is the nuance that not a lot of people really know about, or they don't know enough about how the market works to pay attention to it. But one of the things that can tell you what kind of day you're going to have, like if you're going to balance or not, and what type of trades you should be doing that day. Should you be day trading aggressively or not? Should you just be holding your options positions for theta? Should you initiate new options positions that are directional or not? Is you want to be looking at nuances like how, for instance, the overnight trade happens. So when we had this big spike up on Wednesday, notice what happened on Wednesday night to Thursday morning. You had an extremely small and perfectly balanced profile distribution. Well, what does that tell you about the advance on Friday? Does that tell you that any of those longs are nervous and they're selling, or are they just holding? They're all just holding. And it tells you also that a lot of people are still short and they're just using any tiny little pullback to just buy into and cover those shorts. And notice that the entire activity on Wednesday, Thursday fit very neatly right into the top of the spike, and also price action went nowhere near the top of the single prints where there would have been little support and prices probably would have fallen. So I was saying clearly on Thursday morning, said, hey, this is going to be a rotational day. More than likely, you're just going to stay where you are. And lo and behold, you had point of control right there at the spike and not much happened. Then we get into Friday morning. I said the same exact thing in the pre-market. Why did I say that? Well, look, where's the overnight distribution? It's actually equal to the value area. So roughly 70% of the prior day's trade on Thursday happens inside the yellow box, and lo and behold, where did the overnight trade? Right inside of the yellow box. So once again, it's balancing. It's that whole dynamic of the fact that it takes more than one day for all these shorts to cover and for the market participants to figure out if the move was real. But in doing so, notice that nobody sold in a panic. Nobody seemingly got long and made a little profit and said, forget it, I'm out of here. They were holding prices at that area. And Friday, once again, where did we spend the majority of the morning? Again, here, balanced, because it makes sense. We came in balanced, and then we started to break to the upside mid-afternoon, and that's obviously a little bit more bullish. Now, most importantly, what's going to happen next week and how to play it? Even though Friday's action moved us out of balance, mostly in the afternoon, you have to figure that a good portion of Friday's action really was balanced. The market didn't really move until about after 1 p.m. or so in the afternoon, and it started like a straight, nice trending move up. So I still consider this as a lot of this is balance, and I'm looking for a breakout of balance of next week. Plus, we have the big Trump-Xi meeting on Saturday, which is at the G20, talking about the tariffs, and there could be some sort of a joint statement that could move the market on Sunday night. Hence, I put my weekly options advisory members into a straddle on late Friday afternoon, which made sense. And we also sold some strangles against it using the longer term straddle and selling the shorter term strangles. It just made a lot of sense because the odds are here that there will be a decent sized move. Remember, not everybody covers all the way. And to me, when you break out of, definitively when you start moving above a long-term downtrend late in the afternoon on Friday, that really doesn't bode well for bears. I'm not saying 100% I think the move is up, but it's pointing in that direction. And remember, people just don't cover all the way. And having it on Friday afternoon late, it's kind of like a stealth rally. So I think it screws a lot of people. So there's a good chance that if that news is bullish over the weekend from the G20, we have a sizable gap to the upside. If we do, the play is that we will move here to this resistance, I think, very, very easily. This is where the S&P topped out. So I want you to watch the 28.15 area in the NDX. That would take us to about here, which I think is where it's probably a little bit lower than that resistance, but I'm saying here because you got the 50 MA turning over and the 200 MA, so you have this confluence here. So probably the NDX moves to about 70.90 to 7,100, and the Russell, same thing, moving to that daily 50 MA right in here, approximately 1565 area. If any of this happens, if the S&P has a move, let's say, over the next couple of weeks, 100 points, then the straddle that we put on should perform quite well. It should be just fine. Remember, with a straddle, if you have long enough time where the theta is not hurting you, you're going to be okay if you get a big move. It's really just a bet on getting a large move. So it should be okay. All right, beyond that, what do I like? I'm going to leave you with my top 3 charts here that I like. 1 long and 2 short. I'll start with the long one since we don't really know which direction the market's going to go. First long one is Avgo, which is Broadcom. And this is an absolutely gorgeous wedge building here, out to here. Look at this, can actually connect to this. And there's your little triangle. And I think actually the move is going to be to the upside. Notice that Avgo has shown a lot of relative strength as of late. Think about it. Where did the market bottom out? And where did Avgo go? And what has Avgo been doing since then? Like if you look at where this day is here, this is October 29th. And if you look at the SPY, right, that's also same thing. See how those tie in? This is late October, right? But then after that, what happened here? Notice that you have this big move down in the S&P, and at the same time, Avgo just kind of keeps chugging to the upside, right? When the market moved down, Avgo did not go to the bottom. It maintained this uptrend. So there's definitely some relative strength going on here. This is a pattern that is really building up some pressure, and it could push, I think, at least to the whole number at 250, I would think. And there's some resistance here up in the 260 area. All right, let me give you 2 short ideas. First one is Expedia. Resistance here at the 50 MA. I'm thinking we could go up to about here. And that would be probably a pretty powerful short. I'd be thinking of something at that trend line, maybe even selling some calls up here. If it gets strong enough up to this trend line, you could probably sell some calls with the 130 strike. That's EXPE. And last but not least, Facebook, which has been very beleaguered as of late, not really rallying as hard as the market, trying to get its act together. Friday was actually quite a bullish day in Facebook. It was up almost 2%, but I think it's really just an oversold bounce. And I think that there will be sellers coming in here at around the 150 area. And notice that that's where all this congestion occurred when Facebook had difficulty breaking down below 150. So obviously that move back up towards that level will probably be a short. So that is on my radar. All right, that's all I have for you this week. Thanks for listening. As always, coming at you from Philadelphia, Pennsylvania, I wish you good trading and good night.